Hey guys, how you doing? Welcome to your FX show live on Facebook, on YouTube, and on Share Vision. It's Cool Pips Like a Pro. We talk about all things FX today because it's a Monday, and we've got our resident professional trader in the house, Mr. Andy Demi. How are you doing today on this beautiful Monday?
Do you know what? I'm doing really well, mate. There's 3 reasons.
Wow, 3.
3 reasons. 1, I'm looking out my window and I can see the sunshine. I can just pretend it's nice and warm outside. Number 2, Liverpool back above West Ham.
I was waiting for that.
And number 3, I've just created my NFT metaverse report, and I'm pretty excited about that. But obviously, nice. I'm not going to be talking about that today. But,
exactly.
Yeah.
Cryptos is for another day. West Ham and Liverpool is for another day, because the last time we played, we still beat you. And to be fair, like how good a team Liverpool are, the fact that that makes your top 3 reasons as to why you're happy because you're back above us. That means that we're little old West Ham. We're doing something right, mate. So I'll take that. That's still a win for me.
No, do you know what? If I hadn't reconnected with you, I wouldn't care about West Ham whatsoever. I don't know too many West Ham fans. Maybe one other.
There's not many. There's not many of us, mate. To be fair,
you guys are hooligans, mate. I can't hang around the likes of you.
Wow, that's a little
I like
bit
to say
harsh.
Direct.
That's a little bit harsh.
Friendly Liverpudlian community.
I'm going to say something here. I think there's every team has got its light and dark. Should we say that? I think every team's got the element of that, right? It doesn't matter which team it is, whether it's whoever it is. So, yeah.
You know what, though? I'll tell you something very quickly. The first time I went to Anfield many years ago, I'm like walking with my friends. We're just sort of, trying to find the stadium. And literally, as we're walking, a firework just whizzes past my head. And it's and some kids over there. And it's like, oh, sorry, mate. And it's like, Jesus, mate, you've nearly taken my head out. So it was like a nice.
Was it a friendly? Was it a friendly that you went to watch? Because it sounds like you were in Ireland or some foreign country. It definitely wasn't at Anfield, mate, with that accent.
Where's Gary? Gary's. I need to speak to Gary more. He's from Liverpool.
Well, we need to speak to Brad as well. Brad's in the house live on YouTube.
I apologise, mate, about the accent.
Brad, please give me a rating. Give us all a rating out of 10.
Well, look,
for that Scouse accent.
Do a North London accent, then that's fair.
Brad, come on, mate. Please.
Let's get him on the show next week. See if he can do the North London accent.
Let's do it. I'm happy with that. Well. But for now, let's hear your rating as a Scouser. 1 being not so good and 10 being perfection. He's already nicked someone's hubcaps already this morning. That's how good his accent is. And that's a broad generalization. No offense to anybody.
Leave him alone.
We've also got Hogus tuning in. That's a new name. Great to have you with us, Hogus. Anybody else that's tuning in for the first time, or maybe you're new to the show, just pop in a little comment in the comment section so that we can see some new members. It's all great to have you guys with us. We've got Raj in the house as well. We've got Brucey in the house. Stop it, Gav. I don't know which bit you're referring to. We got Nick Paps in the house. He's also enjoying the sunny day. And we'll say this one because Brucey's given us a nice little compliment. You handsome devils, hello. Roy, our Top Gun, is in the house. And Slav, top of the comments again. So look, guys, we have got, and I know I'm going to say the name wrong again, but this beautiful name, let's just say that. Hi, guys. Greetings again. So great to have you with us. Yep, like I said, we're live on Facebook right now, live on YouTube, and live on Share Vision. So we have got an action-packed show today. We're not just doing an FX breakdown, but it's that time of the month. We want to know what's going on with gold. But before we go there, let's just hear from the mindset of a professional trader. What's the last 7 days been like, and what's your general outlook for the world of FX for the next 7 days?
Yeah, I mean, there's nothing. I mean, the markets have been quite flat. I'll be honest. I have not been very active in the FX markets. There's some other markets that have been keeping me busy, but I do like to take swing trades, and there's not a huge amount going on. And when we kind of look at gold, it's really kind of been stuck in a range, and you've kind of lost that. Gold was very much, used by institutions for that hedge against inflation, but it doesn't seem to be there right now. So you're kind of seeing maybe a transition in that, as we've spoken about before. So yeah, it's an interesting space to kind of watch out for, because intrinsically gold, it's only valuable really because of what we believe about gold, right? To be that inflation hedge, but realistically, it's just a metal like any other metal. So the value comes from our perception about what it stands for, and I think that's kind of changing with the emergence of Bitcoin, in my opinion. So it's going to be an interesting space. I'm not saying gold is not a good investment. It's still prudent to keep some money in gold, but I do think things are changing a bit, and I'm more focused on the trading side than the investing side. But
Interesting. So do you think that we won't see as sharp moves on gold then? Is that what you're saying? Because obviously people are using a different vehicle to hedge right now, right?
Yeah, well, I think it's a new space now, and I think also you've got to think about, okay, what happens? There's some new studies that we can start working on. As you know, I like to study the markets and learn from them and evolve with them, I think. And so, traditionally, historically, we always said, okay, well, as the dollar goes down in value, money moves into gold. So you have that inverse relationship. And let's say that's not happening right now, which it's not so much. Then what would be quite interesting would be to see what happens. If money's flowing into Bitcoin, for example, instead, well, what happens when Bitcoin becomes overvalued? Where's that money going to go back into? Is it going back into dollars, or is it then going to flow into gold or somewhere else? So there's that kind of thought process as well, because
interesting.
Yeah, so there's things that we can definitely look at that could happen. So yeah, it is going to be interesting to see how that evolves, and that's why, the markets are not static. It's not like you can just learn and then that's it. It stands still, and you have to think about what's going on. Where's the big money flowing is always my question. Where's the smart money going, and at what point is that going to change? And that's why it's very, very dynamic. When you have to think about all these different things when they're moving from the stock market. The stock market, as you know, is now completely overinflated, and everyone's saying crash, 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 waiting for it. But it never happens that way. It never does. It never happens when you're waiting for it. It happens when you least expect it. And so
on that, sorry, mate, just on that note, because you've been saying this for a while about the stock market side of things. For anybody that's new, Andy's been saying that, go through the old replays and you can see it for yourself. Do you think it ever recovers if they have this next crash with everything else that's the opportunities that are out there? Do you think it will ever recover?
I think it will always recover. I think that there are different types of investment, but owning shares in a company, I don't think that's going to be any different in the future, even with the emergence of, cryptocurrencies. I think that's still going to be the case. But yeah, I mean, you maybe less so in the future. Who knows? But I think, and I even think, I know we've kind of spoken about this before about the Forex markets. I think the Forex will work alongside other asset classes like cryptos. I don't think it's a case that we'll stop using traditional pounds and euros. But again, things can change. But I think far away from that reality, and I don't think that's going to be the case. I think it's, and I'm seeing a lot of developments in that space where it's kind of building to work with, which is interesting. And I think there's so many things there.
Yeah, there is. And there's a couple of points you said as well that we'll save for tomorrow's show because it's more crypto related. But yeah, that's an interesting point about FX. I think probably what's more worried is any institution that's centralized. They're probably more worried about the move to decentralization, e.g. banks and stuff like that, rather than, like you say, fiat currency may be around for a bit longer. It may have a longer shelf life because, like you say, it can be dovetailed. But obviously that the post that you put in the group earlier about retailers accepting Bitcoin now in the UK is obviously another big step forward to removing that, right?
Yeah. I mean, I think that's just more of a, I guess, at the moment, I think it's kind of going with a trend. I think that's the biggest thing. I think these, retailers are not stupid. And, anything to kind of get people in to buy something. And they can see a trend has emerged. So I think it's more related to that, really, if nothing else. But yeah, I think the whole space is just evolving, and we're trying to evolve with it and trying to figure out, where the new world's going to be. But I do really think that, trading the FX markets represents a completely different opportunity than other markets. That, you don't have the crazy volatility that you have over there. Literally, you could go through the markets now, break everything down, have a cup of tea, place your orders. It's kind of nice. I think for beginners especially. I think as long as you understand the rules of the game, which is, hey, institutions are involved, so be prepared that they're going to try and trap you and trick you and all the rest of it. But if you play your rules, and your rules are smart and they're not greedy rules, then you can absolutely win at the game of Forex trading, and you can make a great living from it, as I've done for a lot of years now. I like new markets. I think they're exciting, but I think trading FX is it's always going to be something that I do as long as the markets are there. And it's so scalable. So, but yeah, it's if you can do both, then you do both, I guess.
And I guess the good thing is that learning to read Forex charts and technical analysis and understanding that side of the game can also be applied to gold charts as well, like we're going to show in a second. So with that being said, guys, we've got 2 live chart analysis for you today. We've got over 20 people on the live and only 5 likes or loves. So with this service that we're giving you, please give the channel some love, guys. Some more hearts, some more thumbs up, or a smiley face. Let's get that percentage up. So with that being said, obviously people are saying about gold that crude's hit a ceiling it's going to hit a ceiling at like $85 per barrel. The declining yield of the UST bonds, obviously that's now saying that things are ripe for gold to maybe go back up to that $2,000 mark. So we've obviously spoken about gold, but let's jump into the charts now and see where it's looking like we're going to go. Like we say, we try and do this at least once a month. Just going to do a few more shout outs while you're getting your chart ready. We've got Anthony James in the house, Dimitar as well. Good to have you with us, both tuning in live on YouTube. And Raj has taken that comment a little bit personally. I'm guessing she's a Liverpool fan as well. Just a bit of statistics, Premier League record games. 50 West Ham versus Liverpool, 9 wins, 31. 9 games 50. West Ham versus Liverpool, 9 wins 31, 45 goal. I don't know what. I'm sorry. Doesn't make sense to me. I think if you're trying to make a point that Liverpool are way better than West Ham, that's not without question, but I don't understand what that means. Sorry, Raj. Okay, you ready for gold, mate?
I am ready to strike gold, yes. Just taking a little look at some things. But yes, let's have a look at it, guys. and see what's been happening. I know there's a few people on here that like to trade gold. So, yeah, and it's absolutely fine to do that. It's a pretty good market to trade. So, one advantage that we have on gold actually is the fact that you can get it on a centralized exchange. It basically means that you can see all of the volume that goes through on gold, which is a big advantage over FX. So this is the gold futures, and this here measures the volume. We've got a couple of indicators on there, and I've got the 50 moving average and the 200 here. So the sort of really easy thing to always check with the market is, is the 50 above the 200? In which case, you can consider that as a potential uptrend. And where is the price relative to all of that? Well, it's kind of ranging on the 50 moving average, kind of forming this little bit of a triangle here. And it's now ready to decide where we go next. What's interesting is that this kind of pattern here looks similar to what we did over here, where we ended up correcting. So it'd be interesting to see what happens next. One of the things that I like to do is I like to study what's gone on in the past. So if I just kind of take that resistance line there, you can kind of see that's where the last sort of push up, where we got to this high on quite a while ago, around August 2011, that's kind of where we failed. And if you kind of take that line, you can see that would essentially, if you kind of mirror that, you can see that we're not yet above that line. So right now, you could argue that a really simple conclusion, you can see how nice and reactive that is there. So gold right now is really got to break through this line for me to be more bullish on it. I think in the past it's kind of failed to go above here, and it could do the same thing again. Now it's kind of a long way away, but you could also consider the fact that the market has made a higher high. I mean, we're talking about a 10-year higher high, and the fact that the MACD has not. You could actually say that is, that's divergence. Don't know how I've got that up there, but so there's some divergence there, and right here the MACD line is below the zero line. It's trying to push up. So you can see here, guys, the last time we had a push up through the zero line, that's when we had the big move up. Hasn't quite happened yet. We did have one here as well. We got a sort of small move up. And over here, if you guys have a look, the last time the MACD was above the zero line, the market went up quite a bit. So for me, I think we're in the consolidation phase. Now, what I've just done there is quite important work, because you've got to understand the context of what you're trading. So let's get my pen out. So context is really important, because you have to understand, right now, if you kind of looked at it in simple, if just, I guess, like in really simple terms, without any of this other work, the thing that you would say is, oh, we're in an uptrend, so therefore I should be buying. And that's kind of where people go wrong. The thing that you need to really understand is that right now we are in a range, and the market is trying to figure out which direction it's going to go. You could even, and this is a weekly chart, by the way, so a higher time frame. So you could even just kind of connect these lows here. You can see there's some kind of good support here. So right now, what the market is showing us is that, one, we're in a kind of battle zone, and we're kind of in a price discovery mode. So we're trying to figure out which way we're going to go. And for me, if you want to kind of consider the long side in terms of the longer term, then we have to break through this double line here, and ideally you want to find yourself somewhere here, and this is kind of like I'm going to put this as I'm going to say BB. We'll actually make this BBZ. It's our breakout buy zone. So if the market basically breaks above and closes above, then you'd be looking for gold to go much higher, and I'll kind of give you some clues as to where it might go. The other thing that I'd want to see on such a break would be ideally an increase in volume. So you can see down here that volume is pretty much kind of holding around here. So ideally you have a nice bullish bar here, and the volume bar goes above this red line. That would give you an extra confirmation that this is not going to be a fake out, because that can happen, by the way, guys. You can get these fake breaks. So in terms of current opportunities, what do I see? Well, since we are, as we said, there's two things. Since we're in a range and price discovery, the thing that you want to focus on is short-term opportunities. And since we're at a high point, you may want to consider kind of like using this as a block to find some short-term sell opportunities. Where that changes, as I said, is if we kind of break above there. So I'll just give you some clues as to where this market might go. I'm just going to add in my fibs and see where we are. And I can kind of tell you if we do break up, where the next leg up is. So I'll kind of go back down here. So let me just use my auto fibs to make this quicker. All right. Let's do auto, and I'll make this a full screen. So what do we have? We have, okay, that's quite interesting. So right now, next move up will take us to about this area here. Now, even kind of looking at this myself, I actually think that the realistic target for me would be probably to take this back up to these highs. According to the fibs, what we've got here, guys, is the market has basically gone to basically a very deep pullback. So it's kind of done this, and that normally, so our indicator will automatically pick the deepest pullback, in which case would be the grey. But because it's gone a little bit further, in my experience, I'd expect this market to stop going up around here. So this high point, which actually quite interestingly brings you up to this line as well. So that's on the sort of first move, but potentially we break this, especially if it's like a big move, and then we can start planning for a move higher. But right now, I'd say the short term is to focus on the downside, and then we'll see how well this kind of line holds here as well. Should we have a quick? Have we got time to have a quick look at the smaller time frames?
Yeah, we got about 7 minutes. So yeah, right. Let's jump in.
Let's jump in. So I'm going to try and keep this fairly simple. Let me just clean this up a little bit.
So guys, whilst Andy's cleaning up his chart, if you want to learn how to do this, you're looking at it and you're thinking, wow, I wish I could do this. Or maybe you know a little bit, but you want to extend your knowledge so that it can turn into wisdom by taking action on the charts. It's Black Friday weekend this weekend. We have got some amazing deals coming up for you. It literally is crazy time here at the London Trading Institute. So that is a massive plug to take a look out for your emails and start looking out for the deals, whether you're a current student and you want to expand your learning, whether you're brand new to the group and you want to start doing this like Andy, then take care to pay attention for the emails that are coming out this week, because we've got some free training. And if you like what you see, then there's going to be some amazing offers in there for you for Black Friday. So pay attention to your emails. With that being said, hopefully that's given you enough time to get your next chart ready for us.
Yeah, so this is a 4-hour chart that you can see here. So I've just done like what most people would do. So connected our points, connected our low points. And you can kind of see on the 4-hour time frame that we've actually broken through here. So we broke through, and you know, for a lot of people, they'd be kind of looking at this as a bullish momentum up, which is okay. Now, here's a couple of things, because we said on the higher time frames that that's possible, right? So it could do that. But here's the kind of acid test for me. You want to kind of identify a level of kind of resistance that basically is important. And that level of resistance, just from what I can see very quickly, is here. So around 1813 is a key level. Now, here's why it's a key level, because this is kind of like a ceiling, right? This is it's the last time we acted as resistance. So this becomes a natural future support for the market. So if this market is going to attempt to go higher, here's what you'd expect. You'd expect the market to kind of, if it's going to come back, react, and then start to take off. If it doesn't, and the market closes below, automatically that there becomes a short. So that's called a fake out. So just bear that in mind. Now, one clue that we can find right now is we can definitely have a quick look at the volume to see what it currently looks like. So what you really ideally want to see is when the market breaks up, you kind of want to see good volume, and that's not bad. That's a really strong bar. And then it's kind of, this is a 4-hour time frame. It's just kind of been a bit, you know, there's a bit of selling volume coming in. So it's kind of mixed at the moment. Now, the other thing I can do is I'm going to just put in my up fibs here, because I want to see, and that makes it a bit messy, but I just want to kind of see where we are relative to the cycles on the lower time frame. And we are basically, let's have a look, A, B, C. So we have a point right here of resistance, 1835. So this little small version, and then the next one would be down there. But that's where the A is. So you kind of want it to hold a little bit above that. So if this is going to hold, guys, then you would be looking to buy this. On the bull side, you'd be looking to buy it, and you'd probably want to put your stop somewhere like there. So why? Because you want to make sure this is going to be a test if it comes back down here. This is going to be a battle zone right there, okay? And we don't know who's going to win. But what might happen is the bears might just almost think they've won, and then they don't win, but then you're stopped out because you've gone really tight. So just give it a little bit of room. You've got a nice high point there. You could be looking to buy this and take it up to the next level, which is about there. If it kind of holds here, okay. So if it holds around here, if it goes a bit lower, then as for those who are students, they'll understand that our target goes down. I think on the bull side, I actually like this target here. So I'm actually thinking, is this market going to go down a little bit further? Because the way the fibs work, guys, in case for those that are new to us, you need to kind of look at the colors. And so wherever the market stops, that's where you'd expect it to kind of go in terms of its target. So if this market was to go down to this yellow line there, okay, then you'd expect the market to kind of stop around that yellow line. That looks like an interesting idea. And that's one possibility. The flip side, as I said, if we close below 1813, I'd be looking to pull for the pullback to sell. So there and then sell. Now, again, for those that have our indicators, I would use the DTR for this, because you could get in on pretty much the low of the day and try and see if the market's going to hold. So let's say, I don't know if I've got the DTR on trading. So the DTR is better on our, I don't know if these are going to work. to be honest. No. It's better on MT4 anyway. So use the one on MT4 if you've got it. And then you can look to buy at the low of the DTR and then see how it bounces. The way you'd want it to do is you wouldn't want it to just to stay there. You'd want it to just bounce. If it just stays there, likelihood is that we're going to push lower. So a close below here, look for a pullback, and then look to take the short. This kind of target here is about 1887. If I go back to that weekly chart, let's have a look at 1887, where that takes us to. Is it achievable? 1887 is still within the two lines, right? It's there. So it's really not a big deal to get to 1887. Also on the weekly chart, guys, you can see there's a really nice horizontal level there. So there's every chance we could make that attempt and go and test that high there. So yeah, I think right now you could focus on the fact that you do have that room, strong bullish weekly bar before. You've got this resistance. You could definitely try and take it back up to there and even slightly higher up to the 1618. If 1813 fails and it closes below it, I'd be looking to shortlist, and then you can target basically pretty much anywhere down to as low as that before another kind of key decision point needs to be made. So there's kind of two scenarios there really, and we have to you can play both. You can play both. So
cool. So that's live analysis number one. That's the gold breakdown for. How long would you say that's good for? Is this, obviously you've given us some day trading ideas there as well, but longer term, how long would you say that this kind of covers that?
Well, this is a
depending
weekly
upon
chart.
Where price goes.
Yeah, I mean, this is a weekly chart, so you've got to think. If you look at this weekly chart, each of these is weeks, and we are kind of stuck in this range right now. So it could stay here for months, and that's what it's been doing. Pretty much since September. It's been September 2021. September 2020. So it's been doing this for over a year now. It's just stuck here. So I think the opportunities right now are short term. I think if you're going to buy long term, you might be stuck in this for a while. And it's kind of 50-50 which way it goes right now, in my opinion.
Cool. Okay, guys, for the gold traders and investors out there, hopefully that has given you some clarity. Alvaro's in the house. Good to have you with us, mate. What about the imbalance directly underneath from 1841 to 1826? Not sure when that came in. You may have already covered that. Yeah, I think that was about 5 minutes old. So maybe that comment's already been covered. If it hasn't, then just let us know. Hopefully that's given you a bit more clarity as well, Alvaro. So with all of that being said, we've concluded the gold chart analysis and the kind of short-term and longer-term outlook on gold. Let's jump over into the biggest FX news of the week. And then from there, as usual, during our live show, we're going to do giving Andy a 15-minute time frame to find a professional FX trading setup. So we'll do the news first, then we'll jump into the FX challenge and see what we can find for this week. So how's the week looking for the news of FX this week, mate?
Yeah, let's have a look at the calendar. So quiet day on Monday, as a lot of the time it is. So not a lot going on today. And tomorrow, anyone that trades at yen, there's a bank holiday, so that one's going to probably be quite quiet. Again, manufacturing and services PMI from Germany, that's not really high impact. So going to be probably a quiet start to the week. And then we've got some more important data coming out. We've got the Kiwi rate statement at 1 a.m. UK time, I believe. Let me just double check that actually. I don't think that's correct, is it? It's Forex Factory, you have to be very, very careful. No, it looks correct. So 1 a.m. for us. different for different time zones. And we have GDP quarter on quarter. So you can see there, previous number 2%, forecast 2.2%. So that's quite a big one. Quarterly numbers, guys, are, firstly, they can get them wrong quite badly because they're quarterly rather than monthly or weekly. So what we normally price in is the forecast. And right now, the gross domestic product is forecast to increase by 0.2% from the previous number. So that would be showing an expanding US economy. And again, kind of, I guess, give another sign about the future rate hikes that are likely to come in. If we had a bad number, then that's going to be quite negative for the dollar. A good number above 2% will be seen as a positive for the dollar. So we'll see what that's going to say. 1:30 on Wednesday. And we've got the FOMC minutes as well at 7 p.m. So an interesting, busy Wednesday. Another bank holiday on Thursday in the US. And then we've got the Bank of England governor speaking at 5 p.m. UK time. So that's going to be, again, interesting to give us an idea of how interest rates will move in the future. And again, Treasury currency report, again, that's not going to have a huge impact. So I think for me, looking at this, the high volatility days look like Wednesday, Thursday. Even though we've got a bank holiday, what you could get sometimes is because the US is on holiday, you may get the volatility on Friday. So typically, guys, 2 out of the 5 days are high volatility, is what's normal. So the biggest volatility days are normally Wednesday, Thursday, Friday, and it's normally 2 of them. So the way you look at that is if Wednesday is high volatility, which it looks like it will be because there's a lot going on, then you look at Thursday. If Thursday is a quiet day, then you can almost expect Friday to be a high volatility day. Whereas if Wednesday and Thursday is high volatility, then Friday is most likely to be quiet. That's kind of what I've worked out from the past. So just kind of have that in mind. But yeah, that's kind of it for the news this week. Let me know.
So which is the what's the currency pairs that jump out to you for this week then? And obviously which is what's the currency pair that you want to use for the 15-minute FX challenge?
Well, I mean, we can definitely look at there's a lot going on in the Kiwi and there's a lot going on in the dollar. So we can use that. We could definitely, I can see people asking for cable. Cable's fine. That's, I think that was one of the ones I would have suggested with UK news, dollar news. That could be quite an interesting one. So yeah, should we do cable?
We did cable last week though, didn't we, mate?
Did we? Okay. My memory's not so great anymore. Is that what we did last week?
I'm pretty sure we did cable.
Any other ones? I'm happy to take a request.
Well, just from the point of view, just for the new people here, you said that there's high impact news on the Kiwi and the US dollar, but you wouldn't trade that pair specifically because it could cause contrasting moves, right? So just to clarify for the new.
Yeah, so I mean, something like Euro Kiwi would be a good one to look at.
Why is that? These are the things that I'm trying to get out of you. Instead of taking just requests, it's those little bits, those little nuggets that you've done from years and years and years of repetition. Why would you look at that and say Euro Kiwi would be a good one?
Well, because you've got the uncertainty of the Kiwi, but which could create some big moves for you. But then there's not a lot going on in the euro, according to this. So you could just use euro as a base, and then you're pretty much playing the Kiwi. So, but it means that you don't have 2 uncertainties. You've got 1 uncertainty. So, because what can happen is for a swing trade, if you get news on two different currencies is like, the Kiwi news might be great, and then you're in profit, and then suddenly the euro news is bad, and then you're relying on two uncertainties, and they both got to go your way, whereas one is a bit safer. So that's why I'd choose euro Kiwi over, Kiwi dollar.
Cool. So with that, and thanks for giving that little nugget there, that little knowledge bomb. That's great. So out of those two, which one do you want to do the FX challenge on? Because obviously it's your call, and we're here to kind of learn via osmosis from you. So which one do you feel more pulled to kind of?
Let's do the euro Kiwi. It's been a while to look at this one. So, and I'll start it from scratch.
Sweet.
Yeah, I'm just going to take a sip of water, and then we'll do the euro Kiwi. Okay, all right, guys. So we'll cover the euro Kiwi. The thing that we always want to do with all of these is to identify the context and what is the market actually doing. And you can kind of see, for those that use moving averages, one of the kind of signs is when the markets are flattening out and crossing each other, and you can see the MA is basically quite flat there. So this is really a range. So the thing that you want to do straight away is you want to get rid of these. You don't need them. You're basically in a range. This is a range that's been holding since 2013, 2012 even. And so if you just kind of box this up, you can see this is basically pretty much where the euro Kiwi has been going. It's like this is the high point, this is the low point during that time over the last sort of 10, 11 years. Okay, which looks quite predictable, right? I mean, you can kind of see this is the highest it goes, this is the lowest it's been. And within all of that, there will be areas, zones that are basically more reactive than others. And that's kind of our job to figure out. We're not looking for the home run from high to low. We're looking for where is this generally going to from. So that's what I'm going to try and attempt to do now. I'll just quickly put in some horizontal levels, okay, and kind of some things in between as well. And yeah, we'll zoom out. Let's just clean this up a bit. So make that a little bit higher. So here's what we've been doing really. We've been kind of going from, there's like three main sections. This is where, in this section, you could argue that the euro Kiwi is undervalued compared to its, recent past. Up here, you could say it's overvalued. So the euro should be selling off against the Kiwi. And then here, you're kind of in the middle. You're in the middle of both. And so this is where we are right now. We're kind of in the middle. So you can see here in the past, this has acted as resistance. And if you have a look now, let's have a look and see what's happened. Well, quite interestingly right now is the market has gone through this level of support here. So that on its own looks bearish. Right, and that could potentially lead to a push lower towards down here. So at the moment, the thing that I like to do is I like to be aware of what could happen so that I can take the other side. But I also need to look at what has happened and look for opportunities with what has happened. And what has happened is that support has been broken, and therefore we should be considering, right, is this market going to go a little bit lower? So that's what we're going to try and figure out, and then we'll see if there's an opportunity for that. And on the flip side, if this market was to close back above here at some point, okay, in the future, and close above this support area, that would be, so especially if it does it kind of within this sort of phase, then you'd argue that this is a fake out, and now we're probably going to hit back up there. But like I said, we have to trade what we see, and right now, this is what we see. So let's do a couple of little things to see if we can identify areas where the market could kind of go to. So I'm just going to do some fib work here and see if I can see anything obvious. I'll try and do it as quick as I can. So that's quite interesting, isn't it? So we have an A, B, shallow pullback. So that's interesting because according to the Fibonacci, guys, okay, you don't have to understand it. Just according to this fib, it's actually projecting that we're going to go down here, which is very, very close to this kind of red line that I've drawn down there. So that's interesting. Let's see what else we've got. Anything else I need to see here on the weekly? I think I'm going to move over to the daily now and see. I tell you what, one thing I will put in is there's a nice little level here. I think we should mark it down because it could be important. I like this because this is the last week. You can see here we had a nice couple of touches there and support and resistance, and we haven't stopped at that level for a little while. That's 156.80. So let me write that down because it could be important. It may not be. I'll just get a piece of paper. So 156.80. So I'm going to go over, flick over to the. I'm going to make this one a daily chart so I can see what's going on. Tell you what I'm going to do, remove indicators for now and remove drawings. Right, okay, so let's continue. I'm going to now add, so I can make this a bit quicker. No, wrong one. Favorites, down fibs. So starting point 4475. Okay, so this is basically telling us that we've done an A, B, we've pulled back into our red zone here. Okay, so this is what happens. The market goes like this. And therefore, it's now projecting that the market is going to go all the way down to here. Okay, which let me tell you what level that is. That is about 150. So now what we're going to do is we're going to go to the 4-hour time frame in just a moment. And I'm going to see if we can trade. There's any setups to trade this down, or if the market is possibly going to pull back first. That's what we need to figure out next. So I'm just going to have a little play around here. So I figure this picture out. Okay, it's not bad. Done. Fit. I'll tell you what, one thing that's quite good to do, because then this is like trending down now on this lower time frame, you could add in a moving average just to kind of see, like something like a 50 is a good idea. So let me do that now. So we can kind of see where we are relative, because everyone kind of looks at the 50. So let's do that right now. 50 moving average. So everybody knows it as red. Visibility, that's fine. Inputs, style, and we'll make it a little bit thicker. Let's have a look to see. Yeah, okay. So it's below the 50 moving average. I'll tell you what, I'm also going to add in the 200 as well. Let's do that. See where we are relative to that. So we'll make it green because everyone knows it's green. And Again, make it a little bit thicker, change the input to 200. And so that looks quite nice. That looks quite nice. Okay. So holding, so when the market's trending, it's holding quite nicely on this red EMA. And then it went sideways, and now it's kind of broken this kind of mini channel here. You can see right there. You can see it's broken that. So potentially there's some room to the downside, but just bear in mind, like, these markets this could easily pull back and then still go down, right? So you could easily come back there and then go down, right? So it can't just be a case of like you sell and just kind of hope for the best. We're going to have to use the lower time frames right now. So if I just quickly flick over to the 4-hour time frame, let's see where we are relative to everything. MACD line's gone below the 0. This is normally quite a good 4-hour signal to look at. So that's below, which is great. And let's have a little look at the last signal. Last signal was here. Market had a nice little drop. Then we went above. The next signal was here. Market had a nice little drop until it went above the 0. And then we've kind of, and then obviously when it's ranging, then it's a bit mixed. I've got to say, this here still looks a bit rangy, and I'd just be a little bit careful. But let's see where we are on the down fibs on the 4-hour here, guys. And then hopefully it will give us a much better idea as to how this market's likely to move. So ignore all the noise. Just let's focus on what it's telling us. So what it's telling us right now, I think there's a high probability, especially because we have a second moving average, a second Fibonacci extension confirming this. I think there's a very high probability that the market's going to kind of come here and bounce. So I think this is going to be the push down before a new wave is created. And then this is like where the decision is going to be made. So it's kind of going to be, and we have the news coming out. So I think right now, I'd kind of sit on the sidelines a bit on this one. I'd look at potentially, if you can get into a short down here, but I don't think I would do it. I think this looks way too rangy, and it makes me think that the market is probably going to wait for the rate statement. Potentially, you can see it's kind of choppy here. It's pretty rangy. We had this kind of little fake out there. It could be a case here as well that you get a push down there and then another fake out and it goes a bit higher. I like this level here, but I don't like this price action to sell it. I think you could easily get faked out here. If anything, if you were going to sell it, you'd be better selling it on this line here, which would be closer to sort of around 162. Let me see if there's anything else that I can share there. Because sometimes you're better to wait or to take what you do see as a high probability setup. And for me, actually, you could consider buy. I know we've been talking about the market potentially going lower, but I think the value play is here. I think 159. When did we set a new? Hold on, let me go back over here. Wednesday. Here's the thing, right? You could potentially look at buying this around here, around, let's say 159.84, as it hits that line, and then like if it can get there by tomorrow, and then kind of just seeing if the market kind of bounces off, you could then just move your stop to break even and let the news come out. and see if there's any surprises, and you can kind of have a risk-free trade in that case. That for me is a clever play, and I think aside from that, if that doesn't happen, then I would be looking for ideally not that. I'd be looking for ideally a push higher to potentially consider the sell. And we've seen quite nice. We've got 50 EMA is at 163.62 at the moment. That would be, let me just highlight that on here. That would be like 1 point to look at, which would be about 163.62. It would be about there. And then on the flip side, this looks like a great area to sell, 167.17, which is a lot higher. 160. So if you did buy at 159, you could potentially ride it all the way up to 167.15, which would be like where that daily 200 EMA is. If I just clear up all these fibs for you guys so you can see this picture a bit clearer. That would be kind of, well, I guess the trend is a bit further back. Let's find a reactive line. There we go. Perfect. Yeah. So you could look at something like a push up to there before the market goes lower. But I think right now it's at a decision point, and I would only play certain levels, and I'd wait. I'd be more interested up here and down here, but this is quite choppy. So the best type of plays are fake outs and fade trades. So you're going against the trend. So if the trend is going up, look to sell it. If the trend is going down, look to buy it. It looks like that kind of market. Look at the price action. It's not clean. It's not these clean waves. So you have to take advantage of the context that we're seeing. So maybe a little bit advanced for some people, but that's what this market is showing me. I can't do anything about that. So yeah. Well, I'm here anyway, so if anyone's got any questions, happy to answer them.
Awesome. So yeah, like you say, that is a little bit advanced. If you can keep up with that, great. If not, then you might want to consider trying to find out some more information about that. And obviously, we do what we can during these free shows. So that was the trading setup for the Euro Kiwi. Couple of options in there. So it'll be interesting to see whether this is something that you trade off a major news rate, or whether it's something like you say that you just sit on the sidelines and wait for a fade trade, and maybe use the DTR and a couple of other day trading techniques to find a quick in and out setup. So is there anything else that you want to say? Because we're coming up to the hour mark now, and I know you've got to go. Is there anything else that you want to talk about? Obviously, the show, if you're just tuning in now, make sure to catch the replay, because we broke down gold. We went and did some live chart analysis on gold. We've given you our breakdown of where we think that's going in the next kind of week to months, really. That's actually a really good breakdown on gold. And then we've just given you some more day trading and swing trading advice for the Euro Kiwi. Anything else that you want to say before we bounce?
No, I think the best thing to do with this is to put alerts at those key levels, and then go and study and have a look at the time, because it's very, very much plays in context with a lot of things. So it wouldn't be one that I'd place orders on, but definitely use the alerts, especially if you have TradingView. Take some screenshots and make sure that this work is useful, so that and you have a plan. So if the market goes into our zones, then you can kind of look and see, right, is there a risk a low risk way of testing what the market wants to do. So it's one of those, it's not clear cut. You've got different scenarios, and even though the weekly's showing us that bullish stance there, FX is a little bit different, and you have to be very wary that you could get a lot of fake outs. And so I've got that in my head when I trade FX. And right now, like I said, there's no clear cut place where I'd go say, okay, go stick an order in, but definitely put those alerts in. And if it's the right timing, you could take those trades. If I take the trade, I'll post it in the group, but I'll be putting those alerts in.
Yeah, maybe we can do an update later in the week. Actually, when does that come out? Wednesday. Yeah, maybe we could do an update on the euro.
Kiwi,
sure. If anything comes out. Right, guys, that's it from us. Thank you very much for spending your Monday with us wherever you are around the world. Remember, we are celebrating a Black Friday bonkersness, as we're calling it. We've been doing some crazy deals. We've got them all set up ready for you. So keep an eye out for your emails, whether it's FX, whether it's advanced FX, whether it's beginner FX, or whether it's the C word. That will be coming out tomorrow. We'll give you more information about that. It's your choice, basically. What do you want to learn more of? And obviously use it in the markets to make some extra money, whether it's a side hustle or more, as people have been doing this year. So thanks a lot for your time. Thank you very much for the comments. Roy's saying thanks again. Great show, guys. Raj is saying thanks both. So yeah, we'll see you tomorrow. Same time, same place for the crypto show. Keep an eye out for your emails, and have a great Monday, guys.
Take care, everybody. See you later, guys.